What's up, traders? My name is Austin Silver. You're going to love what you see in today's video. But if you are not trading Forex and you're looking to maybe transition from Forex into futures, like I did about a year ago, I've got two new courses for you that are newer, beefier, more valuable, and are going to make you more profitable. So if you want to check those out, there's a link in the description. Join us on ASFX TV. You get access to our live streams every day, our Discord, and of course, the two new courses, Futures 101 and Futures 2.0. Thank you very much for checking out this video. Enjoy the Forex course, and hopefully we'll see you on ASFX TV very soon.
All right, so this section, we have another break coming in an hour. So let's go for an hour, and then we'll break and get a snack. I don't think we're going to finish this section in here, so be patient with me as we kind of push through. Cool. So we're going to talk about divergence a little bit here, but we're mainly going to focus on how we have been and how we will continue to use the traditional ASFX, we're going to call them A1 entries in our system. This is going to be shift candles, 2-candle breakouts, 3-candle breakouts, anything off the 21 EMA, anything off the 50 EMA that can have measurable risk reward. And then later today, like I told you guys already, we kind of already talked about it, I'm going to introduce the D1 and the D2, okay? Starting at the top, just kind of go through a couple before we get into the trades. The session has a lot to do with what we're trading. So when we talk about what markets do we want to trade, you guys saw this morning, I already talked about how I like to trade GBP and I like to trade Euro right now. Who has a couple ideas of why that would be? Why do we like GBP and Euro right now? Throw out some ideas. Don't have to raise your hand, just talk. What's creating the volatility? What else? What about Trump? Come on, let's be specific. What's he doing with Europe? Do you know?
Brexit.
What about, no, thank you. Do you know what tariffs it is? Exactly. So there's a big potential tariff, 25% tariff. Trump is kind of hanging in the balance over European auto imports. Another big player when you talk about moving the euro. So we know Trump and his impact on the market. That is a big factor in this. But with the point here, we want to trade markets that are open because they have volume and they have volatility. So GBP and Euro pairs, you want to trade them during those sessions. Don't trade USD CHF at 3 o'clock on a Monday. Don't do that. Mehmet did that, and I was like, I see what you're saying, but it's a slow pair at a time where there's no one trading. Like, the technicals are there. I get it. But we need to layer the deeper meaning of what trading actually is. You have all these components into trading. It is not just looking at a chart. Any questions on the sessions? Good. All right, Eric, here's your list. You ready for this, bro? I know you've been waiting for this. Because Eric was like, I just need a refresher on some questions, like my checklist. And I don't have a checklist like I used to, right, where I used to have one printed out because I have been doing it now for a long time. So the first thing, we talked about this while we were doing the markups this morning. What direction is the liquid 50 telling me to trade, right? First question I'm always going to ask myself, what direction is the liquid 50 telling me to trade? On any time frame, any type of pair. Second thing, what directions are the EMAs telling me to trade, long or short? Or are they in reset? Three answers are applicable to most of these questions. It's not just long or short. What's the third direction?
Sideways.
Exactly. Don't forget that. Next question. Does the liquid 50 agree with the EMAs in terms of direction? Long, short, or chop? Long, short, or chop? Do they both say long? Okay, we're getting a little bit of confirmation here on a trend. The next question I'm going to ask myself. Okay, I got my direction. How much space do I have left on average daily range? I won't go to the pivot points off the jump because if ADR is fucked up, I don't even care where the pivot points are. Excuse me. Make sense? That drink made me burp. Thanks, Jacob. After we figure out how much space is left on ADR, the same kind of question you want to ask yourself, like how Shaba did with the GN trade, measure the stop loss. Can I get a good risk reward set up here? Can I find good potential R with this setup? Then, after you say, based on ADR, can I get a good risk reward setup? Then you say, where's the nearest pivot point? Where's yesterday's high, yesterday's low, that key level? Where is that in my potential way? Last question before you take the entry. On a basic level, these are all the questions you need. Is that candle off a significant level? The EMA, the 21 or the 50 EMA, not the 8. We are not taking entries off the 8. Right, Forrest? Yeah. Got it. Highest probability trades, because we're always talking about grading the setups, and we're going to spend a lot of time on that today, but the highest probability trades are in trend, right? What else? What else? Make sense? You have space, I've got volume. So I've got trend, I've got space, and I've got volume. What else do you need? Nothing. That qualifies good trade setups. If you can get in at the proper time, those are the kind of trades that we want to be involved in, because over the long term, these are the highest probability trades we're going to find. That means we're going to make the most money trading on them. Key levels, because you've heard me mention this a lot. Pivot points are important. Yesterday's high, yesterday's low, very important. Asia high, Asia low, very important. Sometimes I'll call them initial high of day, initial low of day, IHOD, ILOD, initial high, initial low. And then, of course, 50, 200, 800 EMAs on any time frame. Any questions on EMAs? Any questions on the TDI? How to read it across different time frames? Anything like that? Good? What does this mean? What is a swapping liquid 50, Scott?
Either from buy to sell or sell to buy in the same day.
Exactly. Or buy to sell, then sell to buy. Back and
Forth, yeah.
What's full trend? Just shout it out, anybody. EMAs are in order. What else? Everybody's in the same zone. L50's in the same zone. We like that trend. What's full reset?
At the S50.
At the S50, you could even say price. You could describe price in a way, like for Shabbos trade off the bottom.
What is full reset?
Full reset is if the EMAs are kind of coming together. You're trading as price comes together. So full reset would mean I'm trading it off the top, and the EMAs are coming together, meaning it's coming down towards the 800 EMA, bringing the 50 and the 200 down towards it. You're going to see a couple examples. I want to get the terms out there before we then put the charts to it. The last one, counter trend versus in trend. How do we define counter trend versus in trend? Somebody.
Towards or against the 800.
Okay, what else? You already said it already. The whole point is here, I'm having you layer the same answers on each other. What else helps us define trend? The liquid 50, the EMAs, right? These, like I said, are the basic entry systems with this A1 system. The 2 candles, the 3 candles, and the shift candles. Does anyone not understand, and we're going to go through hundreds of photos right now, but does anyone not understand the difference between these? Here you have that 21 EMA cross with the 8. Here these are candles that are kind of like breakouts as the trend is continuing. Does that make sense?
I wanted a quick clarification.
Yeah, please.
On the shift candle.
Please.
Does it have to actually go through the EMAs, or can price be anywhere? Not anywhere, but for example, does price have to go from under the like, for example, long? Does price have to go from
I know what you're saying.
over
So
and actually cross through as the EMAs cross over at the same time?
No.
Or can it be just above?
correct. So the latter is the answer. So what he's saying is if we get a shift candle and the 50 EMA is right through here, but it's a shift through the 50, through the 21, it's coming through, and the 8 and the 21 cross there as well. Does that qualify the same way as if that candle was above the 50 and the 8 and the 21 crossed kind of on the bottom of it and the 21 was on the bottom of the shift? Absolutely. Shift candles have to be seen, and you'll see some of them in here, as exactly what we call them, shifts of the zone. That's what it's shifting. So if you're dropping, the 8 and the 21 are coming down, the 8's on the bottom in that situation. When it shifts back up, the 8 then gets on top. In the uptrend, the 8 is above the 21, right? That shift of the zone on good shift candles has that TDI confirmation. That tells us that we're probably getting back into direction of overall trend. And that's why I think you still need to keep in mind the direction of the EMAs, the direction of the liquid 50 when you're judging, is this a good shift candle or is this not a good shift candle? And we'll go over, there are examples that I have that kind of highlight that too. So we'll talk about exits too, because I think, not that there's confusion about this, but it is a grayer area because everybody's going to have their own kind of style of getting out of trade, and everybody's going to kind of act a little bit different every time they exit. Even me, when you have rules, you still will look at certain things and act a different way sometimes. So the safest exit is the break of the 8. But how many people have seen a trade that breaks the 8 EMA and then gets back outside it and continues in the direction? Who has seen that happen?
Do you do more than, like, I would assume you do more than a candle or two for the break?
With either a strong igniting bar or 2 or more candles. So I'm not getting out of these trades most of the time, full position, on a break of the 8 EMA. It's not enough for me to be like, this is dead. Because like we just said, I've seen too many other situations where we've broken the 8, held the 8, and then continued. Like that GN trade we just showed that fucking just keeps falling, just holding the 8. And you're like, why am I out of this trade? You guys have seen me. And I'm like, Why? And it's, dude, I've got my own problems with my trading, right?
Watching videos where you talk about it like 20 pips profit and it just keeps going to 10, 100 pips and you're like, damn it.
Dude.
If I waited just a few hours.
All right. And aside from all of this, part of my biggest issue, when we go back to the intros, is that I act too much for you guys. I act too much sometimes to get a good trade on video.
I feel that too. Yeah.
That's my biggest problem right now. And that translates into the easiest way where Logan said it. His issue is letting his winners run. That's how I can voice it. But that is rooted because I want to make sure I'm getting these videos done and explaining the trade well and getting out in profit to show that we're, able to do that. So that's, of course, and that's where this comes from. But where I think over the last 5 years we've really developed a lot is this exit signal. So remember, going back a couple of years ago, we weren't even using the 21 EMA. We were using the 13 EMA. We remember, and that 13 EMA is tighter. So when it's tighter to the 8 EMA, you're going to get, you're going to get out of it sooner than you would if you were using the 21. The 21 gives you a little bit more space, so you can then kind of let it breathe. The way that I have this written here is important to talk about. And again, I know we're going to visualize all of this, but it's important to talk about because a strong igniting bar is a bar that's going to break through the 21 with no question if it's through or not. Where this comes from is in a shift candle trade, Ryan. It shifts. We move up. It pulls back to the 21. What do we see often after a shift candle off the 21? 2 and 3 candle formations. Continuations, right? If it holds the 21. So if I get in on a shift candle and it pulls back and doesn't break the 21, or if it breaks the 21 in a way that I know it could then form a 2 or 3 candle formation, why would I be out of the trade? That doesn't make any sense. If it can hold the if it comes to the 21 and just kind of closes on it, I'm waiting 15 more minutes. That's it. 15 minutes and that thing better come down, hold the 21, or move up and get me out of it. I'm out. That's it. So the breakouts, or excuse me, the breaks of the 21 to me are the best exit signal. The break of the 8 EMA is safe. You're going to book profits, but you're also going to leave a lot of money on the table. So the system itself is always built on math. And what I said here is you take a trade anticipating that it's going to go to take profit. That's why you chose to take the size you took, because you based that on the stop loss, based it on your risk. That's where the size in the trade comes from. So if you take a standard going for 20 pips and you pull the standard for 10, every time you're not acting accordingly with proper risk reward, proper risk management. Does that make sense? So let's talk about that. If you take 50% off at 1R, what's going to happen? Walk through this with me, and if I made any errors, I'm a simple guy.
Quick question.
Please.
This is one thing I was waiting till you got to this because this is what I'm having a little trouble with.
This is where we, yeah.
50% off. Now I use MetaTrader 4, Lambda.
Yep.
And I haven't figured out a way yet to break the trades up other than taking multiple trades.
Sure.
In other words, let's say risk reward, 10 pip stop, 20 pip take profit. All right. So 50% is 10 pips. So without making multiple transactions, how do I take 50% off?
Cool. Good question. On MetaTrader 4 on the mobile,
Or even here. You can do it on the desktop.
you can do it on the desktop.
Yep.
Yeah. I don't know how to do it on the desktop, so I'll let them explain it. But on the mobile, I open MetaTrader on my phone, and when you go to close, like,
When you go to closing, you can adjust the lot size that you close.
You can literally close less than whatever.
at the top of the screen where it says your lot that you have open, at the top of the MetaTrader when you go to close it, like, let me see if I got a demo account right here. Watch. I know you guys, can you see my screen at all? Can you see I'm down in the trade? Okay, so when I go to close this trade, go close. At the top, you see it says 0.44. It says the lot size that I was putting on it, right? I can click the dots, the 0.01 or the 0.1, and I can change it to 0.34. So now if I close it, I closed only 0.24 and I still have 0.2 in. And now that shows as one trade. But because it has the same entry price, when you look at the P&L at the end of the day, you'll know it's the same entry. Does that make sense? Like, you've seen a lot of my photos on Instagram, right, where I show my P&L, and people will, dude, every fucking time I get a DM and it's like, how did you do 4 entries? Why did you do that and not do a big lot? It's like, do you not read any of my other shit? It's like, I say the same thing every time. It's crazy. But yeah, that's how you close that. But literally, you took your example scenario, I read your mind in advance. I got it right here. So let's talk about the math. Now that we know how to close some of it, talk about the math. So one lot, we're risking 1%. Don't worry about spread in that stuff for this example, just round numbers. You'll understand why in a second. 10 pip risk at 1%, we're gonna get 20 pips and look for a 2% gain. Follow me there? Closing half of this trade at 10% would mean that you're closing it so that you have 0.5 lots in and your 1%, now that 1% position, closing half of it at 10 pips nets you 0.5% gain. Does that make sense? So you closed at 1R on the take profit level, but you did not pull 1R. You pulled half R. So what happens? If I get stopped on the rest of this trade, it's a wash. It's basically like the trade didn't even happen. Not the ideal scenario.
You don't move that stop loss, you keep it where it is, right?
If I move the stop to break even, yes. In that situation, yes. Here, if I get stopped at the original stop, yes, wash. Because I closed half, yes. Yes, exactly.
Do you always do that?
No, I'm saying that's not what I do.
Yeah, it's not.
Right, so watch. If I move the stop to break even, I make that 5R if I get stopped on it at break even because I took the half off right there. It's not ideal for the long run because you're fucking up your risk reward over and over and over again.
Because whenever it goes against you, then you're just gonna let it get your stop loss, and you're gonna take more losses than.
So now look at it this way. So now you're basing your trading off a system that is supposedly a 70% winning system. But you're closing every trade early and then getting stopped on the other half of it. So you're, in theory, only winning half of that maybe, or even less on the final R. Trade-wise, your win rate is still fine, and this is where traders will be like, win rate doesn't matter. No, it does. It's a piece of it. All of it matters. You know what I'm saying? So how do we manage this the right way? This is what I've been doing, and this is what works well for me. I'm not going to say, do this, this is it, because I don't think that's the way you handle trading. There are too many situations, more recently, Shaba knows, we're at, what do you call it? Chicken. He's like, I'm chicken. I'm out at 1R, and it goes 6. I've seen like 5 of them from him in the last week. And I'm like, this dude could not, he could have paid for everybody's flights if he could just hold his damn trade. We could have had 50 people at this seminar, Shaba. So if the trade is going 2R, if I'm risking 10 pips and I get up 10, more often than not, I'm taking a little bit, 25 to 50%, and I'm leaving the rest of the trade alone. Because it's more often than not going to be a winning trade. I'm not going to get the full stop out at that original stop, meaning that it would wash the trade. Does that make sense? I'm not leaving this, I'm not changing the stop, I'm not doing anything with the stop, I'm leaving it because I believe the system, and especially right now, is winning more than it's losing.
If you're saying that after 10 pips it's most likely going to be a winning trade, why are you taking?
That's not what I said. That's not what I'm saying. It's not after 10 pips it'll be a winning trade. That's not exactly what I meant.
Right, but you're saying once you get up in profit.
It's not about the it's about the R. So 10 pips is just for this example.
Then let's say if you're up 1R.
Yeah.
Why would you take off a part of the position if it's, at that point you think it's going to be a winning trade?
Good question. I think that's my personal tendency to know that I want to put something in the bag because I was in a winning trade. That's where me, over the long run, I found success. And the days that I've bagged 25% of it off at 1R, over and over, in the long term, those small little bags have helped me when I've taken a big loss. Does that make sense? So it's more just like, again, this is why I don't say it's a cut and dry exit rule. I will preach cut and dry entry rules, but I won't preach exit rules because I think, as you'll see here, everybody has a little bit different of a risk tolerance. So, and this kind of goes into your question too a little bit, Logan. On an A setup, if we get like that GN trade that we all closed our eyes for, if I can get to 2R on that, that's when I'm going to lock the stop. And again, you're asking me why? I don't have an answer based on math. I don't have an answer based on anything other than the fact that if I'm up 20 pips and I only risk 10, I'm not going to take a 10 pip loss on that trade. I'm not. The market I know moves like this too much, and I'm not going to leave myself susceptible to getting in that. You know what I'm saying? I'm in, I'm up, I need that money. That's what I do. If it's a B setup, if I'm trading a 2-candle formation, not a shift candle, and it's decent EMAs, could be better, it's a B or a C, I might even lock the trade at 1R. And this is where I'm being open with you guys and saying it's not cut and dry. I can't say to you, every 2 candle formation, put the stop at break even when this happens. It's not going to be like that. That's why we're here today. We're here today to talk more about how to read the chart and understand what is it telling you. And I think a big factor before we get into that, like how do you read it so it's holding the 8 EMA, how do you use the shorter time frames? A big factor of that is saying, look, if I'm in a C setup and I go up 1.5 R, you're taking some of that, if not 50% of that at least. Who are you to think that you could be so greedy? That's my perspective. If I'm in an A setup though, like that CHF JPY divergence trade that I had a couple weeks ago, off the 200 EMA, in trend with space on ADR, I gotta be like, fuck man, can I get up 2R and then lock this thing and walk off? Yeah, because if I get stopped in profit and I cover the position that I have left and I was up over 2R and it turns around on me, I want to be out of that trade. I do not want to go up 2R and then back down into drawdown. And that goes into just my mentality of the snag and bag, where you would probably hold the trade, right? Right, it's just a different mentality. But again, what it comes back to, I think, to lead to consistent money is being consistent with the way that you do it. So for me, this is where I've found my consistency. If it's not a great setup, I'm taking some off at 1R and I'm managing from there. And the big thing about the management too is I've been moving the stop loss up and taking the take profit away. Can I move the take profit to the next pivot point where it's way up higher out of the way, still within ADR, still within reach, right? I'm not going to shoot to make this an above average day, but if this isn't a great setup and I can go in and get 1R on a C, if I'm risking 3 and I'm up, or if, let's say I'm risking 4 and I'm up 9 on a C setup, mine. It's good risk reward. You know, you put a 0.5% winner in your pocket on a C setup, you're happy about that. Those add up. Does that make sense, Scott? Yeah. Does that make sense? Everybody like kind of clearing the air a little bit more on the exits. And we'll talk about this more with the examples. If it's holding the 8 EMA, stay, and you're in trend, stay in the trade. Have a 0.01 still in the trade.
You're so used to losing so much, you want to grab any little thing you can and you panic.
Who has felt that? You've lost money, so when you go up, you're like, fuck, man, I'm not losing this. That is exactly the issue that keeps people. You remember the video I made, level 1, level 2, level 3 traders with the circles? I think that issue prevents people from level 2 to level 3. That is so hard to wrap your mind around, but if you can, this gets a lot easier. I think acting on this gets easier.
It's like kind of circling back around to the mentality part. When we in our actual trading, we don't call the top, we don't try to call the bottom.
Right.
So why would we do the same thing for our exit?
Exactly. How could you know that unless there's a lot of exit signals, and you could be right saying this is a good place to get out?
If you're not going to see it drop, call the bottom, and call it. I think that's what
correct.
You're not getting in that.
For example, like the Euro USD trade we were just looking at today. That trade today, Santiago, we were all looking at it. It was inside the Asian range, and it traded to the high of day, which was the top of the Asian range, right? In that situation, you might be able to call the top of it because you would say, I'm buying this. I know it's in the Asian range. I know it might not break the Asian range. That could be the top for the day. It might go higher the next day, but in that case, you are. But in your situation that you were speaking on, that's like saying, I take GN short. It's got 180 pips on ADR. I took 90, and it fell 170. Are you going to be mad that you took 90 and followed your rules and got 5R? No. How would you know that it's going to go 170 more than ADR, or whatever the math was on what I said? You know what I'm saying? How would you know that that's going to, you don't. We can base it on averages. We can base it on probabilities. That is all we can do. Add these indicators in, add all these contributing factors in, and we can base probabilities off that. Let's talk about handling losses better. First thing,
actually going down one
yeah.
question. How did you actually calculate the risk, one with the leverage? That's what I'm right now trying to figure out. Usually you have brokerage that have over 100, over 500 leverage. Mm-hmm. Right now it's the first time I'm dealing with a 1 to 50.
Yeah, that's the first time you're dealing with it.
Yeah.
So Owanda's always 1 to 50. In fact, Owanda's going to go lower when you go to GBP pairs. When shit goes crazy with Brexit, you'll get an email from Owanda that says we're lowering leverage 1 to 25 for the next 3 days. They've done that a couple of times. Remember that, Drew? Yeah, they will do that to us. That has to do with U.S. regulations. I mean, dude, since 2008, when Dodd-Frank was signed, that law changed so much for financial regulations. That's why we can't trade XAU USD. Can't trade gold with a regulated U.S. broker. It's a CFD, a contract for difference. Ever since 2008, derivatives trading has been scrutinized, right? All these things have been scrutinized. So, yeah, the 1 to 50 leverage, the way that I would go about it, and I can give it to you. I have a lot size indicator calculator. It's an indicator you add to MetaTrader 4. Does everybody here use it, or most people use it? Yeah.
Also a calculator on baby pins you can use.
Yeah, and
I use the someone over here sent it.
My FX book, I'm using it. My FX book doesn't work.
no, I didn't like the MyFX book one. I don't know why. I just couldn't get it. The one that I have for MetaTrader, you put it into MetaTrader, you literally put in the stop loss, put in the risk percentage, and it calculates it for you based on the pair. So it's easy because it changes depending on the pair.
If you have a pair that, a broker that it has that you can set up with your TradingView account, like Hollande is on there, Forex.com is on there. Forex.com actually has a place where you can say I want to risk 1%, and then you put where you want your end or where you want your stop loss.
And it'll tell you.
And it'll adjust it as the trade moves.
Yeah.
So it'll do it all for you.
Yeah.
And you said that you have that for
MetaTrader. Yeah, MetaTrader 4.
When you actually try to execute the trade.
So it's an indicator. Riley actually can, she has the text. She'll send it to everybody in the chat. Go into the indicators folder on Google Drive. You add the indicator into MetaTrader 4, and then in the indicator, I think just trying to visualize doing it. Right click on the indicator. You hit show indicator contents. It'll pop up. It's 2 questions. It says stop loss and risk percentage. It's already going to calculate for you the dollar for pip exchange over, depending on the pair that you're trading. So when you build a template on MetaTrader 4 and it has all your indicators there, and you can drag the pairs onto it, and it keeps the same template but changes the pair. If you put this indicator on, when you change the pair, that number, like for me it says 2% and then it says a lot size, that lot size number changes every time you change the pair. So it tells you, because each pair, like I said, is different. Euro USD, 2% of your account is different versus GBP NZD. This indicator does it all for you. Makes it very easy. The only thing you got to change every time is the risk percentage and the stop loss distance in pips. So I'll 1%, 13 pips, and then it'll tell me what to do on that pair.
Exactly the same. I use it every single time.
It works.
The only thing that doesn't work is on cryptos, but that's
Yeah.
I don't trade cryptos
Right.
like that, so doesn't matter. Everything else is good.
Any other questions? Good stuff, guys. Good? Handling loss is better. The mindset is very simple. Every time you take a loss, you are one step closer to a winning trade. Who's done sales before here in any industry? Who has done sales? What is the number one thing that every sales coach guru always says? Hey man, get out there, get them no's, and because as soon as you get that no, you're one closer to the next. Right. Same mentality right here. Another good little tagline. These are all little things I feel like we could tattoo on our face or on our neck or something. Put on a t-shirt maybe. You're not trading to make money. You're trading not to lose money. Take that a step further. We're risk managers until the trade is at break even. Think about it, and then I'm going to talk about it. Say it to yourself again. I know we're not trading to make money. We're trading not to lose money. Because the second you place a trade, right, you pay a commission based on your spread, you're down. You're trading to get that money back into profit. Once the trade is locked and you're at break even, now you're just a risk manager. You're not trading anything. You already made a decision. Now you're managing risk. Again, these are just like little mindset things to get you thinking about trading as a business a little bit differently. What's that say? What does that go back to? Hard fucking work. Do chart markups. Do listen to podcasts. Do more conversations with other traders. Do put yourself out there to meet other people, right? The belief in the system. Everybody who said their weakness was pulling the trigger, a couple of you, put in more work. I have no doubt in the most certain thing I could say to you all day is that if you do more chart markups and you do more work based on the system exactly following the rules, you will increase your confidence and you will not have an issue with pulling a trigger. 100% I'm sure of it. The only reason I'm standing here is because I do more chart markups than everybody else. Swear to God. And I'm kind of good at finding patterns. That's it. All this, I said this already. Markups, journaling, videos, all will increase your confidence. Let's talk about risk management. We all know the grading system A to C, right? Fixed risk percentages, and the pair that you're trading should play into how much you're putting on that grade. For example, a GBP NZD, sorry Riley, my girlfriend with an A setup gets more risk from me than CAD CHF with an A setup. Who knows why? Because I like her better. No, why? Why does GNA get more risk? Why will this get 2% when this will only get 1%? Why? Say it again, Shab. CAD CHF is slow. It's that simple. Yep. Everybody understand that? Who can tell me the difference between an A, B, and C setup? Pretty good. What about How would you qualify a B versus C setup?
When there's like two or slightly three things off of your list.
Exactly. So the way I like to word it is how many parameters can be better? When we're looking at a trade setup, every time we're asking ourselves, what can be better? Write it down, everybody. What can be better? That is what you should ask yourself before you act in every trade. So A setups, like Forrest said, nothing can be better. What does that look like? Perfect liquid 50, perfect EMAs, ADR has space, new high of day, low of day. Pivots are not in the way. What else could be good about this trade? Anybody else have anything else they'd add to this?
Well, we can say the entry candle is a valid formation too.
Perfect. What else? What else? Off a significant EMA. Yep. What else? What did I just say the slide before about the pair? A setups can be qualified by really good volatile pairs, really good pairs with a lot of volume. That would be an A setup. Let's take it to a B setup. Like Dennis said, close to perfect, but something could still be better. Maybe the EMAs aren't in full trend, or it's a swapping liquid 50, or it hit overbought or oversold. It's just not perfect, but it's still pretty damn good. Talk about a C setup. Now, I'm not trading C setups very often, right? Because the risk is going to be smaller, and it means that there's a lot of things wrong with the trade. So why do you think your money should be even involved in that setup?
Sometimes we cannot even get mad if we get the L.
Do you want to know why people trade C setups? Who knows why? Come on, say it a little louder. We could all say it on 3. 1, 2, 3. Eagerness. We're all eagerness. We're all a little too greedy. When people... Everybody took 4 other words to say eagerness. When people show me C setups, when we mark up with EMAs like that, or like, for example, I'll call it a C setup if the candle body is not off the 21. You send me a markup, Forrest, and it's not off the 21, instantly it's a C setup to me. Yeah, you could be measuring risk reward perfectly. But if it's one of those key parameters, if it's a swapping liquid 50, if it's not perfect EMAs, if it's not off the 21, it's instantly a C. I'll still put 0.5%. I'll call it a C setup, put 0.5% on a setup. But that's rare. I think more often we need to be focused on Bs and we need to be focused on As. So here's my percentages. Never more than 4%, I think, is the goal for all of us. There's no reason to have that much of your account at risk ever if we're really here for the long run. What makes you think, other than that word that no one said but everybody said, other than that word, the E word, what makes you think that you should ever need to have more than 4% of your account at risk at one time?
All that don't you allow it.
Right. Huh? Exactly. The dash here is for the difference in pairs. A setup on GN, 3%. A setup on CAD CHF, 2%. You follow me? Okay. Are you ready to get into some charts? Okay. All right. Are we ready to get into charts? Can we get a little more excitement?
Yeah. I fucking go. That's what I'm talking about, boy.
Like we're at an Eagles game. Eric, you're funny, bro. All right, so this is the most recent trade that I've taken, because you guys remember last week I didn't take any trades. I was flat. So this is going back the week before. This is GBP USD on Friday the 8th. Does anyone remember this trade?
Yep.
No. Drew, you remember this trade? Yeah, I remember all of them. Yeah, because Drew got stopped out and Drew walked away here and missed this. So when I posted this, I knew Drew was going to be like, fucking why the fuck does he have to bring that up? So breaking this down, let's go with, whoops.
So that's 50 minutes.
So yeah, we're going to always, the way that these markups are built throughout the presentation, 15-minute markup is always going to come first. Unless I'm making a point, it's going to be 15-minute, and then I'm going to show you the smaller time frames or the higher time frames, whatever I need to show you.
The entries, 15 or 5
15 or 1. 15 or 1. Or 5. If I see the setup on the 5, I'll do the 5 too, but I'm lately 15 or 1 minute. Like this one. Okay, so the 2 candle formation off the 21. That is off the 21. Like that's how you describe off the 21 EMA, right? It's beautiful. It's got measurable risk reward. You know the stop could go right above those pushes off the 50, off the 21, right above the entry candle open price, right? That was the first signal. Now you can see if you read my notes here, the stop I had was too high. I got stopped, or I would have been stopped here. I actually pulled the trade when it broke the 50 right there. That pullback through the 50 was like, we're not moving lower. Here's the thing. This 2 candle formation, to me, it's almost a breakout for a new low of day. The next candle does break for a new low of day, which is great. It's a perfect liquid 50, perfect EMAs. The thing that I think I made a mistake with was that my stop was just a little too high. As you can see, it doesn't make the move. I could have had my stop right here above the entry candle open price, and I didn't. I had it higher. So when it broke back through the 50 here, I pulled the trade. But I stayed patient. Now, I don't want to bounce all over the place too much, but I want you guys to understand here, make this smaller here. Here, when this broke the 50, what had been created, come on, don't beep at me. There we go. What had been created was this purple line. Do you see it now? With my push down here, created this divergence, right? See that rising RSI on the bottom, falling price action. Now this is going into a Friday, so I'm seeing this divergence build. I just got stopped, but I stayed patient and I got back in short right where you have it marked here, and I put the stop back where those pins were. I ended up making my money back and ending the day profitable because I got back in. Here, a couple things to note on the re-entry, and then I'm going to show you the 1 minute. First, look at that trend line at the point of entry. Do you see how it's hooking down as the RSI falls through the liquid 50? That's a really nice looking TDI setup, right? Especially once this candle closed through the divergence trend line, another really good confirmation that it's going to probably come lower. Here, if we go back, dude, stop beeping at me. Yeah, here we go. All right, sorry about that. So, good, you're good, brother. Back on track. So here's that second entry, right? Let's backtrack just for a quick second to the first entry. Do you see those two purple lines that I have drawn here and here? If we're going to start talking about the divergence trades as we get deeper into this, we want to layer it on top of what we do with the ASFX stuff. So here, with a liquid 50 like this, with EMAs like this, what direction are you trying to trade this? Clearly short, right? So when it pulls back to the 50 EMA, if you're awake, these are potential entry signals here using the divergence. Look at what I have drawn here. You should have a falling RSI and rising price action, not once, but twice. Here again, look at that falling, look at that rising. You got 3 hits in there and a break of the 50 EMA, and that's going to be the entry signal when we go into it later. But notice you have 2 sets of divergence here on the 1 minute, which really helped me feel confident in this 2 candle formation. When I saw that divergence up there, where the purple lines are, I'm like, yes, that's going to definitely tell me that this is more likely than not coming lower. So you take the entry, bless you, you get stopped as it pulls back. What happens? You could start thinking, like Scott said, I want to punch the screen. You could start thinking whatever everybody else was saying, like, I'm mad, I'm frustrated, I'm going to buy it, I'm going to flip directions. I was even saying, if you remembered in the chat, when this candle, not starting off too hot, huh? When this candle broke the 50, that could be a signal that this is actually going to come higher. Remember, Shaba, as the D2 idea, because you have divergence on the bottom on a Friday, it breaks the 50 EMA, and you could see it go full reset up to the 800. The 800 was above, right, because you're in a downtrend. So that break of the 50 could have gotten us long. Flip directions, go get it. But it didn't. Why? Because trend should always win. Perfect liquid 50, perfect EMAs. If you ever try to buy something like this, I'm always going to give you shit for it. Even if this went full reset and you made money, my response would be, it doesn't have to do that every time. And you'd be like, oh, you're just talking. No, I'm not. I'm not talking the other side of it. I'm telling you that doesn't have to happen every time because this happens more often than not. It stays in trend. It literally just retested the Asian session high. 1, 2, 3, 4.
Is that the reason you have your stop loss there?
Yep, exactly. Because I knew if it went back up to that point, I'd be done. 2 losses on it, I would be done.
Oh, so on the first entry on the call.
First entry, the stop was too high.
Exactly.
It should have been a little bit lower.
Was it because of the high of the day, or was it because the 50 was too close to the candle too?
I put it where I put it because I saw this level right here. And I was like, I can afford the risk reward here because I saw that it had the potential to fall a lot. The pivots were out of the way, so I knew it was okay to still give it the bigger stop. The risk reward still made sense. Now here on the re-entry, this is why I liked it. Look at the 1 minute again, 3 more hits to divergence. Look at the falling RSI and the rising price action. 2 breaks of the 50 EMA could be a potential 1 minute short, right? D1 in trend because you're on the 15-minute 50, you're on a significant level, and you're short biased. So that could tell you here that it's going to come lower, and then you get the 15-minute entry here on the close as it comes through. Now, I took my entry. You asked me if I do it on the 5, the 1, the 15. I took my entry on this trade right after this candle. It's not marked exactly. It formed. I didn't take this trade because Riley remembers I was on the phone with my accountant. So for those of you that are in the VIP, like I'm telling you, you remember this. I was on the phone, got off the phone, I missed all that. As soon as this, I started watching it like right around here. As soon as this came back to the 21, and held it, I got in right there. That's why my entry's right here. That's the spread. Make sense? And then it falls.
That is pretty entry. What should your stop have been at? The one that stopped you.
Right there. I know that's not a great.
So at about the top of the 50.
Right above the 50, yeah. Because this 2 candle is where you're entering off of, right? Your stop loss on these A1 entries like this is open, entry candle, open price. Since that's a bearish candle, you want the open to be on, the open's on top, so your spread would be added to the top of that, and that's where you would put the stop. Good? So I want to do a couple A setups first, and then we'll kind of work our way backwards a little bit, okay? These are what I would qualify as really good risk-reward setups. So this is GBP NZD, 15-minute chart. This is back a couple days before Halloween. First thing, you'll see the Friday zone set here at that pin. 2 candles to the left, 2 candles to the right are not higher, so that's your zone. The Liquid 50 carried over the weekend in the buy zone, clearly long biased. 800 EMA is on the bottom. Here at 2:30 in the morning, New York time, no? Weird. All right, we're just clicking for now. I'll fix it on the break. 2:30, breaks out for a new high of day, and it breaks past the zone set on Friday. So when you talk about solid breakouts off a solid EMA, look at how that push off the 21 clearly comes off the 21. It pinned to the 50 EMA as well. So that would be another sign to you that it could come higher. The stop, Christian, again, entry candle, open price. So it's right here plus your spread. This trade ends up working really, really well after it pulls back and retests the zone. So kind of going back to what Drew was talking about a little bit earlier, when things break, a lot of the time, you're going to need to see it retest that level. And that's exactly what it does here. Look how the pin comes right down to the bottom of the zone, kind of where it sat at a few hours before. With that, you hold in, talk about like setting good risk reward, setting the stop loss, setting the take profit. You hold in, you get paid. Anybody do the math on that? 209 to 264, like 50 or so pips. Questions?
How about the other candle in the next side when it goes from the 50 all the way to the 8? That one. Yep.
100%. Stop can go here, entry price on the close. One time frame for entry. That's it.
Because that one's at 2:30 a.m. Who's going to wake up at 2:30 a.m.?
Ryan, some of the guys that are in Vegas, West Coast,
Oh, damn.
they stay up and they trade, right?
Not anymore.
Not anymore, you used to. Yeah,
Yeah, because that would be more like my time zone right there.
me too. This is right before 9 a.m. Now look at this one later in the session here. Right here.
Yeah, that's like probably 8.
Look at that trend line. Beautiful. See how it's hooking up like that? Perfect. RSI comes through right on the close. Boom. Take the entry. Take the risk.
Still, or it would be a B setup?
I'd probably say it's an A setup. It never hits overbought. It's got space on ADR. Nope.
The 50 and the 20.
Yeah.
But before that entry of the 50, you see the breakout and then the pullback on the 21, or was that big candle was driven by news? Though?
This?
Yeah.
I didn't have any news this day. It could have been, but I didn't have any news that day.
'Cause
Yeah.
When candles like that happen,
You would think it would be
breakout
news.
stops too.
Right. So that could be an issue for sure.
When it's close to your stop, so you can get
It could spin. Absolutely. Definitely something to be aware of. But I think
Be false breakout, and then because after that you get the drop down, so it could be getting people to go long there, stopping them out.
yeah, maybe that whole move could have been driven by news, but it might have been news that wasn't scheduled. But I think when we look at these markups, as long as you're aware of the fact that news could be something to shake it up, and then you don't take a trade into news, you'll be fine. You'll still identify A setups like this.
a good entry on the 50. So if you're good at taking losses,
How about this? Yeah, how about that is news? It stops you out. You get another entry a couple hours later. Go to the gym and then come back. See if there's anything else later in the day, and there it is. Like, that's how easy it can be, really. All right, any questions on this one? Make sense? Yeah, please.
Do you still want to see a shift candle off a certain EMA?
Yeah, so like this is actually a good, perfect time you brought that up. So this is where Ryan was saying earlier, would this be considered off the EMAs? To me, yes, because the shift is going to change the direction of zone. The 2 candle formation, that's off the 21. That you would not want to trade in a situation like that. I mean, that's a shift candle. Or if it was something like that, you're not going to get a 2 candle like that. The 2 candles need to break out like this, but this can shift the 50, the 21, and the 8 all at the same time. Absolutely.
But does it need to come off a certain EMA or?
I would qualify that as coming off of just because it's kind of cutting through them.
Because right now, like I'm looking at GBP CHF,
Okay.
where it looks like it's getting ready for a shift candle.
Okay.
But it's not off the EMA because it's actually pushing through all three of them.
Which one?
GBP CHF on the 15th. I don't think we're gonna get an RSI cross, but that's just why I was looking at it.
You can see if you have divergence off of the 1 minute 800 per D1.
I tried. I didn't see any divergence. I mean, I didn't look too hard, but I didn't see any.
So he's looking right here as this bar in 7 minutes is going to close and potentially, see how right now the 21 is above, right? If we're in an uptrend, the 8 will cross and get above the 21. So you still would need technically what you said, a shift candle here. Like see how now that 8 is starting to move above it? Yeah. Now it's starting to shift. What qualifies it as a good shift candle more than where is it coming from like this? Like let's say this cleared this level here. It could shift. That could definitely be a bar that'll shift your zone. The problem with that is this. Yeah. I see a flat trend line and a falling RSI. I think the RSI in 7 minutes, 6 minutes will have a hard time closing through both of those levels, through both the liquid 50 and the trend line. I think it's going to have a hard time doing that. If you were above the 50, I bet you the RSI is already above the trend line, and then it's a lot easier to then take it as it comes through just the liquid 50. Does that make sense? Yeah. So in a situation like this, I would feel more comfortable if it's above the 50, but you can definitely see setups that shift like this and then still carry forward. Something to take, I think, note of would be the break of the 50 and how many times it's tried to get above. I wish I had the clicker. It's tried to get above here, back, here, back, here, back. Choppy. Choppy.
And set that zone right there.
Right here.
Yeah.
Exactly. And even so, look at the Asian range on that pin. You still got a huge pin here. You see that?
I didn't get that pin.
You didn't get that pin? You have the other broker, right?
No, it's a Forex.com.
Right. This is Owanda.
Yeah. What are you trying to say?
Keep an eye on this while I keep going on the slides. Let us know how this closes in 5 minutes. He said, "What'd you say?" Hey man, I don't get paid for that. Dude, this is pissing me off. Cool.
At least you got the mouse now.
Yeah, at least I got the mouse, right? It's very touchy though. All right, so again, perfect liquid 50, right? What could we talk about? The first question is always liquid 50. First thing you notice here is what? Thank you, love that. What? Love that. What else though? Here, as this is falling, do we notice? Like Ryan just said, I like the crossing trend line here, how it starts to cross and hook back up. The liquid 50 never touches the stationary 50, but what did I just mention on that last example about where I like the better shift candles? What did I say? Do you remember? Exactly. See how this is a shift off the 21, off the 50, right there? That body is on the 21 and the 50. That's a beautiful shift candle. The stop goes right there. You're talking 7 or 8 pips.
No, I love it.
Here let's talk about some exits, right? If you got out when it broke the 8 EMA here, or even when it broke the 21, what happens? You leave money on the table. If you don't pull your trade here, like I'm telling you not to, because that's a 1 candle break with not an igniting bar, that's a pretty small bar, that should let you know that this could push and give you another entry right there. Shift candle, pull back to the 21. Now we'll talk about this a little bit today, but it's not super important. Levels. More often than not, you're going to get 2 levels off good trending moves. Third level, that third extra push, is not guaranteed. That's as simple as I can make it sound, and that's as simple as you need to understand it. Level 1 being shift. This is level 1. That is your level 1 move. Consolidates. This is level 2. This push is level 3. That push is not guaranteed in any move on any day. So what I'm really looking for, the best 2 candle and 3 candle formations are the first pullback after a shift candle. Write that down. Don't forget that. Not in the course, not written anywhere else. The best 2 candle and 3 candle formations are the first pullbacks to the 21 and 50 after a shift candle. Risk here again, stop at entry candle open price. Beautiful. And here, it doesn't even break the 8 EMA and goes, I mean, you're in at 33. It looks like this pin here, God, this is touchy, probably goes to 50. So you're looking at least 15 pips in there, and your stop was 8. Almost 2R right there outside the 8 EMA. Make sense? Even in this example, you put the stop up at 34, 35. You don't get hit here or here. It's right in here, kind of tucked in here. Barring some crazy spread breakout thing, you don't get hit. You can hold this thing all day. Keeping that mentality of it kind of went about 2R, 15 pips with an 8 pip stop. It's pretty damn close to 2R. I'm going to lock this and leave a little bit on. Leave 10% on and see what it does. You're in trend with a perfect liquid 50. If you find perfect liquid 50 and if you find perfect EMAs, more often than not, it's going to end the day where it tells you it is. If this isn't the buy zone, it's going to end the day higher. So you want a piece of that move. Okay, another one. Perfect liquid 50 in the sell zone. Perfect EMAs. 2 candle breakout off the 21 EMA. 7 pip stop. Where's the exit signal?
Awesome. Question: What do you consider perfect liquid 50? How long have to be on your selling side?
Good question. Today only.
1 day?
1 day, right here.
So if we, from the day when it starts, it's in the sell zone and stays during the sell zone, and you got a signal, it's considered perfect liquid.
Perfect. Okay, so here, it's a good question, Santiago. Here, again, we're talking about A setups right now, so these are all going to look very similar. How many pullbacks to the 21 EMA happen after the shift candle here? And which one was your entry? So when we talk about level 1, level 2, level 3, level 1 is that initial shift. Level 1, level 2. Make sense? Look at the 2 candle formation. Look how it's coming off the 21 with the entry candle open price on the 21 EMA. Look at how the candle closes past the consolidation set right here on the bodies, not the wicks, just focus on the bodies there. It's a new low a day breakout with a solid body. On top of that, falling. Not rising, falling. Make sense? When we talk about exit signals, this is 5R. If anyone took a trade like this and closed it for any other reason other than risk reward was good, I would say you didn't trade it that well. The only reason to exit a trade like this would be based on risk reward or when it hit oversold. Those are the 2 good reasons to take the trade off. Oh, I was up 3R. Okay, cool. Like, good. 3R is a good trade. You do that, you're going to make money. In a situation like this, though, other than that and other than oversold, who's got an exit signal here? It doesn't even break the 8 for more than a candle. Literally, the breaks of the 8 are 1 candle. Patience. Do you know how much patience required for this trade? Who's got the balls for that? Everybody should put their hand up. Yeah.
I was talking to the guys this morning that when I started trading with your system, I was trading AUD at night. All winners with that pair.
I think at night too, because you're getting that AUD movement, right? Yep. So here, again, in a situation like this, who's taking this trade when it presents for a new low a day? Anybody else? If I'm awake. Say, for all of our examples today, because they're all over the time, just say you're awake for all, you know what I'm saying?
Oh, all right.
Because there's too many trades at all time frames for me to only look at, one set of time. This was a good trade. I was actually in this trade on 9/11. You remember certain things like that. This is an hour trade. So we're looking at a 1 hour chart here. This is EuroCAD. You see the zone set to start the week. This is Monday. The zone is set. The zone gets tested on Tuesday, but it can't break back above the 21. So overnight, when it tries to get back above the 21 EMA above here, and it can't, what is that telling you? Sellers are strong. That's it. Don't say anything deeper than that. Sellers are strong. It breaks off the 21. It's not a new breakout for a new zone, breakout for a new low of week, but it's a new low a day. All this price action previous to the day was very tight. So here, that's a breakout for a new low a day. Does everybody follow me? Stop at the entry candle open price. My stop was about 19 pips. The next hour bodied the zone. Like Drew said, sometimes you'll see a retest, and then it continued. Nicely. Very nicely. I took 40 off of this thing, I remember. A nice trade on a Wednesday. Look at the 8 EMA. Look at the trend line. Look at the liquid 50. Look at the EMAs. Again, it is going to get repetitive here when we get into more and more and more of these, but that's the point. It's the same fucking pattern. Liquid 50, EMAs, readable risk reward off a solid EMA. What's up, Chris? What's up, Victor? Good.
Do you remember how you got out of this? Like, did you scale down lower?
Yeah, so I remember I took some off at 20 because the stop was about 20, so it was 1R, take some off, right? And then I remember, I don't have it marked, but I believe there was a pivot point. And I was like, this is good 2R, and I took the pips. I didn't get all 52, but that kind of goes back to what Ryan was saying earlier. How was I supposed to know that it was going to go 52? I'll take 40, risking 20, it's 2-1. I'm a big 2-1 guy. Like, a lot of my trades are 2-1. I don't do 4-1 often. I just don't have the patience for it yet. I'm trying to get there. I'm trying to be able to do this. But that's hard. 2:30 to 9 o'clock, bro. That's hard. I need to be sleeping to have that patience. Because otherwise I'm going to be like, that's good, let me take it. When it stops here and goes sideways for an hour, those 4 candles of not moving, and it's at this zone that I see here, you're like, oh, fuck, this could bounce. This could bounce. This could. But where is it? It's outside the ADMA. Now we're getting somewhere.
So why you don't put it in a break even and you let it run?
Because I'm a bitch. Because I still struggle. Like, I'm not that good. You know what I mean? I still like that money. I want that money. It's my biggest issue.
Mistake right now is that you make winners losers.
So locking the winners is a good thing for you, and that's, bro, literally, I feel like that was me when I first started. And I feel like a lot of it, kind of going back to Logan's question, he's like, why do you do that? I feel like a lot of it was because I was in that mindset, like that, and I wanted to win more. So it was just like, let me lock them, let me lock them, let me lock them. And now it's to the point where I'm like, oh, we're doing pretty good. I need to learn how to hold these trades now. You know what I'm saying?
I like what Drew said. He said it a few months ago, but he said that either talking about the trades, either stop me out or rip.
I like it. Drew, you hear that? Yeah, it's true. Stop me out or rip. And that goes even back to what I was saying about one of the other slides. You took this trade as a B setup with 1% risk, assuming that you can afford that 1% stop out. 15 pips, 12, whatever the stop is. You took that knowing that there was probably at least 30 pips on the other side of that trade. You're here to trade. We're here to play. Like when I was at the casino the other night, you're here to play, right? Like when the guy asked me, do you want to double down? I'm like, hell yeah, I'm here to play. Like I'm not here to be a bitch, right? I lost both of them, but that's why I don't go to the casino. But the point is I'm here to play. Play it out. You throw me 2 8s, bro, I'm playing that out. Double that up, let's go. You know what I'm saying? Play out your trade. See it through. Questions on the 1 hour trade here. Eurocad.
You take it in 1 hour or you take it in 15 minutes?
Taking this off the 1 hour. Straight off the 1 hour. It's fractal. Do you know what that means?
Yeah.
So multiple time. It's like water, right? That 2 candle formation looks damn near the same thing as that. 2 different time frames.
If you want to know the time frame, just look at the top right corner versus a Wanda Eurocad 60. That'd be the 1 hour.
See how this markup is smaller? I did this markup on my laptop screen, then I realized doing the markups on my bigger screen would look bigger here, and I'm glad I did because they look good. Let's do one more, and then we're going to go get some snacks real quick. When we go do the snack break, just bring the food back in here so we can keep going. Pee, go get the food, and then come back. Last one, real fast. Changeover of day is here. Where's the liquid 50? Buy zone, all day. Where are the EMAs? Buy zone, all day. 800's on the bottom, 250. Asian session, you get your consolidation. We're looking at CHF-JPY, right? As we get later in the day, it's 8 o'clock in the morning here, you get the 2 candle breakout off the 21 EMA. Does everybody see that? Off the 50 kind of, you got a little pin in there to the 50. The reason I like this, 2 things. Measurable risk reward, rising trend line, rising RSI, and on top of all of it, look at just the level. If I could draw straight across, do you see that? How here it just kind of sits, breaks, comes back. Kind of breaks, comes back. You got to stay in line with these EMAs and these TDIs when they're perfect like this, and then understand that it is going to always move in a wave. You could have made money in here, potentially long. You could have made money a little bit in here, long, and that's all based on a perfect TDI like this. But the best entry formation, if you're up here and you're looking for longs, that's not a great entry formation. Look at the falling trend line. That's not a great breakout. Wait. Good thing you waited. Here, nothing. There's nothing in here. That is not a shift candle. That's not a shift candle. Just chill the fuck out. It's a 2 candle formation right after that. If it's kind of fudgy and you're like, oh, that's maybe a shift candle, just fucking wait. Because if you wait and you're wrong and it wasn't a shift, you're going to be like, good thing I listened and I waited. And if you're right, the worst that happens is you miss a trade and you leave a little bit of money out there. Leave a little bit, not really. You hit it the next time. The best thing that happens is you wait, you get a good entry like that, and you're like, hell yeah, I waited, I deserve this. And you feel like you're going into it like beating your chest. You're like, I knew this could happen, and I'm about it. It's the if-then statement. If this holds the 21 EMA, holds the 50 EMA, holds the liquid 50 in the buy zone, I'm staying long biased.
So question, what would be better in this trade?
It's a good question. You tell me. I see one thing.
The TDI. The TDI, that's the only thing that I don't...
What about it?
The hooking EMAs in the TDI too. And it's,
I like, see, like this part of it, how it starts to rise here. I like that. That's good. This part of it, from up there down to reset, I don't like that part of it. But why I would still take the trade, this wasn't inside the Asian range. This had broken out of the Asian range here. It's 3 o'clock. You're out of the Asian range already. If it was still in the Asian range, I would look at that and say, fucking reset, stay away from it. Inside, like on that Euro USD, falling liquid 50, inside the Asian range, no go. Outside the range, in my opinion, this fell to give it more space to rise. You were outside the Asian range, which would tell you still have the volatility for the day. It would tell you could still get some gas in it. So when it falls like this and it doesn't come into the sell zone, it doesn't even touch the stationary 50, it just kind of falls back down. It's almost giving itself more space for this, potentially. The other reason why this could have come down here is this. This strong pull overnight could have been so strong that this could be reflecting that pull still as it kind of chops sideways. Does that make sense? Yeah. And one other point. Chop sideways, falling liquid 50, reset. Those are signals of reset. But when it holds and holds and holds 6 a.m., 7 a.m., 7:30, it's still in the buy zone. How long, if you look at it, I mean, at least an hour, the RSI was above the liquid 50. It was already in the proper position. You just needed a candle off the 21, and you got it. So once this is in that position, yeah, it's falling. Maybe give it a B setup for that. But at best, that's the worst you can do on this thing. I can't find anything else wrong with it. That's 8 pips of risk. It's got to be in. Where's the exit signal, family?
The what?
The exit signal.
Well,
Risk reward overbought. That's it. This goes 3, almost 4R. No 21 breaks, because why? It's an A setup. A setups don't fuck around. Look at that. That's one slight break, kind of. It broke kind of. That's it. This is where you go up 1R, take a little bit off. You go up 2R, in trend, lock the stop and shut the fuck up. It's true. Hear me say that in your head when you see a setup like this. If it's a perfect EMA, perfect liquid 50 setup, you need to be putting money on it and you need to be holding that trade. More often than not, the liquid 50 is going to tell you where it's going to end the day. Where did this liquid 50 tell me when I started the day that it was going to go? I've had the theory, ask Drew, for a long ass time. You wake up here, somewhere in here, like 9 o'clock here, 8 o'clock New York time. We wake up, we look where the liquid 50 is, we just click that button and we just wait. I've had that theory. It ain't a trade strategy, it ain't anything we should ever act on, but that's what the TDI has shown me as far as how powerful it is. Like, you could see it back there. And if it holds that zone, by the end of the day, by here, it's going to be higher in price than it was there. That's where the D1 stuff comes from. So before we take a break, last point. The D1 trades, like I said kind of earlier, let's say you didn't get this clean 2-candle formation. The D1 stuff will show you divergence in here that would then give you another signal to take it higher. So perfect liquid 50, perfect EMAs, whether it's A1 or divergence stuff, same thing. These are the high probability trades. That's what you should get out of this so far. EMAs, L50, ADR, pivot points, off a solid EMA. Those are the money. Make sense? Any questions? Giordano, questions? FA? Go. It's okay. Any other questions? So here's the next one. We'll look at this in 5 minutes. Go get some snacks, go get some coffee, and then we'll do it